All right, hello everyone. So today I was very bullish. Today's already passed. What's most important is what's going to happen next. All right, so it's not as easy to ascertain what's going to end up happening tomorrow, but I'm going to give you guys a quick recap about why I was blindingly bullish today and why tomorrow I think we could also be a bit bullish, but then it just becomes a little choppy potentially. All right, so I'm going to talk about the S&P 500, the NASDAQ, the Russell. We're going to take a look at the interest rates, the dollar, and the bonds. All right, so without further ado, we also have to take a look at the VIX and the large tech stocks. So we're also going to take a look at the McClellan oscillators. So that is a few interesting things. I hope you guys enjoyed today's video. If you guys are enjoying everything that I'm doing here and everything, please make sure to like the video. And subscribe to the channel if you haven't already. All right, so without further ado, let's get started. All right, guys, so we got into 4:30 calls on the SPY for October 3rd and October 6th. Each of them, by the end of the day, the runners and everything were up almost 40%. So that worked out really well. We also day traded the S&P intraday. Those calls went out really well. I did not buy any put today. It was all calls. And the number one reason for that was very simply, as you guys know, when we open outside of the lower level of the Bollinger Band, guys, it is so difficult. You should not be leaning bearish at all. It is very difficult to basically just think about it. So if you're looking at it from a 1 minute, if this is a 1 minute candle, these are all 1 minute candles. When the market makes a huge drop lower, especially when we come to close to 427, 428 level of support, why would you start going short there? The most plausible, obvious understanding would be to buy the dip and re-short once it goes higher. So that's simply what we just did. We just bought the dip. All right. We opened outside the Bollinger Band on the SPY, on the NASDAQ, on the Russell 2000. All of these showed a lot of weakness, so we simply just bought the dip. Okay, that wasn't the main reason though. And moving forward, we have to take a look at the other things. We're going to take a look at the VIX and everything else, but what is most important that we have to really look at are the large tech stocks. But first, let's just take it one step at a time. First thing we're going to take a look at is the McClellan oscillators. The McClellan oscillators do a good job of explaining like the overall buying power of the market. All right, so first let's go ahead and take a look at that. All right, so we're taking a look at two McClellan oscillators here. The NYSI, this is stockcharts.com. We're taking a look at the NYSI. And when it's red, it obviously shows bearishness. It means that there's sellers on control, okay? But in the past, when the NYSI flipped black, which is bullish, that's when you could clearly see buying pressure occur in the S&P 500. So this is still showing bearishness, right? But then now when you go to the NYMO painted a little, I'm not going to pay for you, painted a little, it flipped black here, which is starting to show a bit of bullishness. This is not an automatic reason to be bullish. It's just one. This is just one reason to be bullish. All right. The NYMO flipped black. That is generally a pretty high chance that we're going to bounce a bit. How high we're going to bounce, whether we're going to hit 433, 434 is yet to be seen. We're going to take it one day at a time. But for today, we know for a fact that the NYMO flipped green, or, black. All right. There's that for the NYMO. The next most important thing is I want to take a look at the VIX and the yields. All right. This video, I can already tell, is going to be very fun, guys. So this is the VIX. The VIX is very important because it has an inverse relationship to the market. All right. So we look at the VIX, basically, if it is showing outside of the upper bands here, then we can start to lean a bit bullish on the market, because this basically strength outside of the upper B bands like this should not sustain itself. So when the VIX is basically at a point of resistance or showing weakness, then that's bullish for the overall market. And we opened outside the VIX here. We spiked up, but then we opened outside the B bands, and then we closed back within it. So this technically now on the VIX is not overextended anymore. So it's hard to just be blatantly, according to the VIX, it's hard to just be blatantly bullish on the market, because the VIX is now trading within the Bollinger Bands, is not algorithmically overextended anymore. All right. So there's that for the VIX. Now let's take a look at the yields. All right. So the yields, what we were looking at on the yields is when these yields start to show bullishness, it is generally bearish for the overall market. Okay. So the 10-year yield is showing some strength here, right? And once again, it's similar to the VIX in that it has an inverse relationship to the market. So when the yields are doing really well, then it's bad for the market. Okay, very simply. And when it is very overextended to the upside, it basically gets to a point where it can't continue, right? So if it can't continue, right, then obviously it should be falling lower. And if it falls lower, then that is bullish for the overall market. Okay, so now we just have to see tomorrow where these yields are going to open. And the 10-year yield is not that far overextended. The 5-year yield, not overextended either, right? The 2-year yield, you can see that the shorter term yields are not overextended. And what you see instead is the longer term yields are getting overextended to the upside here. So we just looked at the 20-year yield. Now this is a 30-year yield. They're getting overextended. All right. So this strength out of the longer term yields cannot sustain itself. And once again, this is a bit bearish. Obviously, in the short term, it's a bit bearish. Obviously, in the long term, this is clear strength, whatever. But immediately for tomorrow, that's what we're looking at. We're taking it one day at a time. This is not sustainable. This should lead to a bit of a pullback. That is my intuition. And what furthers this intuition is the 30-year bonds. So the bonds are also showing a lot of weakness here. So the bonds are also important because they have a bit more correlated relationship to the market. If the bonds are doing well, then the overall market would also be doing well. But now, right, the bonds are very far overextended to the downside. There should be a bit of a bounce. The yields are overextended to the upside. There should be a bit of a pullback. So that's basically what's going on with the bonds and the yields. And you could see that there was enough buying pressure in equities where this bond collapse below support did not cause the market to fall lower. It actually helped. You know, look, the equity buying pressure was not affected by the bonds, is what I'm saying. All right. So why was that the case? Why is that not happening? Right. And for me personally, the main reason why that's going on are the large tech stocks. The large tech stocks are keeping this market afloat, and we have to monitor them every single day, guys. So next, we're going to take a look at the large mega cap tech stocks and see. I'm going to explain to you guys why those are the main things holding this market up. All right, let's get that. All right, guys. So I was saying that we were going to take a look at the large tech stocks, right? But this is a chart of the SPY. And I first want to give you guys a little background of what we've been monitoring in terms of the strength of the tech stocks and how it's helped the market push forward. All right. So back here, when the market fell down, when the SPY fell down to 443, initially, I was very bullish here. This was September 7th. Very bullish. And the reason for me being bullish here was because the large tech stocks were either showing a lot of strength, they were at levels of resistance, or they were holding support and they looked bullish. Okay. So here I was very bullish on the market and we ended up bouncing. So then last week we came to 443 again. I was not bullish because the large tech stocks started to show a lot of weakness. And if you guys remember, Apple was trading in the 180s, and then it fell down to 174, 173, 174, 175. The large tech stocks were not showing strength. And because the large tech stocks were the main reason why the market was being held all throughout this time here, it was not safe to be long the market once we got here. But now, down here, when we are at extremes to the downside, the large tech stocks are starting to hold their own just a bit. All right, so we're going to take a look at that now. So let's take a look at Google. Google wicked below support. The Bollinger Bands on Google are pointed upwards and painted a green candle. You can't really... So now tomorrow, say for example, you guys want to be bearish, right? You have to think about it. What are the odds that Google is going to post a big red candle tomorrow and give back all of its gains? Very slim. What are the odds that Google is going to continue going up a bit heading into tomorrow? It's plausible. It's much higher. Even if Google does pull back to 130, 150, this is still a pretty bullish situation here. You can't really be bearish after the initial bounce out of some lows. All right. So Google is showing some bullishness. All right. You'd have to be very biased to say that this is not really bullish. All right. So Google, Microsoft holding support. All right. I'm just going to go quick through these. All right. Microsoft holding support. Obviously, clearly a green candle closed on its highs. Amazon was up 1% early in the day. Nothing was doing well. Amazon showed strength. When you have to have these large tech stocks on your watch list, and you have to monitor what's going on intraday with these large tech stocks. So if the entire market is red and you see Amazon, you see Microsoft, you see Google, you see the chips, you see these stocks doing well, but the overall market is red, you have to scratch your chin. You have to think, that could be a sign that we could bounce. And Amazon was a big sign. So Amazon showed a lot of strength earlier on in the morning. We checked Google, Microsoft, Amazon, and Tesla also showed a bottom, wicked lower, painted a green candle. This is still, obviously, guys, is still showing a lot of bearish momentum overall, but for another move to the upside tomorrow, it's very, very likely that these stocks can do that. All right. So Tesla, Apple held its own, guys. Apple was holding support. It was holding support, and then we ended up closing above 175, which is very, very important. Us closing above 175 was very good. Let's see if we can close above this little combobulation over here, close to about 177.50. But Apple, I'm not expecting huge moves out of Apple. We just want to see Apple hold support, and that's exactly what ended up happening. But then the chips were a big reason why the market bounced. All right, so the chips, this is a chart of Nvidia. Nvidia held this trend line. We were watching this trend line from earlier in the year, from December, right? Now this is acting as support very, very clearly. And Nvidia bounced from 410, now it's at 422. So Nvidia helped push the market up. AMD, similar situation to Tesla and Google. Broke the lows, painted a green candle. AMD is very, very important here. TSM, obviously also TSM held. We were at a very, very important level of support on Taiwan Semiconductor Manufacturing Company Limited. Held support here at 85. Very, very good opportunity. You can't really be bearish here when it's at a very important level of support. And that's currently what's going on. And then when you look at the ETF, the SMH, shaking my head. Van Eck Semiconductor ETF held support, bounced up. Nvidia, AMD helped move the market up. TSM followed. And yeah, so with the chips, large tech stocks either holding support or bouncing, it's very, very difficult, guys, to be bearish on the market. Now, I'm not saying this is an automatic reason to be extremely, extremely bullish. I'm not saying any of that. We can easily gap down lower tomorrow and then sell off. I'm not saying that. But it's difficult to do that. And it would be much safer. Why not just let it bounce to 433, 434? That's my thought process. And then if people want to take profits, go for it. And then you could sell off. Because overall, guys, many people are still looking at 420 or people are looking at 410 to 420 as the year end low, like the low for the year. They're thinking 410 to 420 is going to be that point, and that could happen, right? Like immediately when you, that could happen. But so now let's see how far away we are from the 23.6% fib. So generally, another thing that I do that usually always works is from a recent high to the most recent low. This can happen on the 1 minute time frame. This can happen on the daily or the weekly time frame. You almost always get a retest to the 23.6% fib. And 23.6% fib just happens to be at 434. So it's very, very rare that we don't hit this point first. Once we hit that, then, you know, if the momentum is going to continue being bearish, then that's going to act as resistance and it's going to continue falling lower. But it's just insane to try to be bearish down here. Especially, it was insane to try to be bearish earlier in the morning when these things were at levels of support like this, which is not smart. So now tomorrow we have to continue to see how the large tech stocks hold up. We're going to have to see how overextended the longer term yields are going to be. We're going to have to see the bonds. We're also going to have to take a look at the VIX. But so far, this is leading to another bullish day heading into tomorrow. The large tech stocks look good. Google looks good for a continued bounce. Tesla looks good for a continued bounce as well. This looks like it could break above 250. Amazon was already showing strength. Apple was already showing strength. These large tech stocks are at levels of support or showing some bullish moves at support. And yeah, you know, that is basically what we want to see. The other good thing was that the IWM, I was showing how yesterday the IWM was getting very close to this 175, 176 level. That held as support absolutely perfectly. We didn't fall lower, and that the IWM was actually the leader intraday. And then later on, the NASDAQ got its act together. And this is pretty bullish on the IWM as well. We should continue up. I would be shocked to see if the IWM does not break above 178.50. But yeah, you know, with that being said, we're going to have to see how everything plays out. Tomorrow morning, we have news at 9:45 a.m., I believe. And then on Wednesday, we have, I think Wednesday morning, we have GDP news coming out. So hopefully we get a bit of a more bullish move heading into tomorrow. Tomorrow, hopefully we get to just lean long on all of our trades. Today, earlier on, guys, I don't know, 1 minute time frame. If you guys were watching the market, all of these setups just got bought up and just had like exuberant, just like a really, really alarming amount of buying pressure. And it's because during these times when the larger time frames are pointed towards a bullish bounce, intraday, you get these big monstrous moves to the upside. And then eventually we just start chopping around. But, you know, we got some monstrous moves to the upside because on the daily longer term charts, we were leaning towards a bounce. And the same is opposite. Same is true in the opposite direction. When it's very, very bearish on a daily chart or a longer term time frame chart, then everything gets sold off and it's super, super bullish. So it's super, super bearish. So I hope you guys enjoyed today's video. Hopefully tomorrow is going to be another easy sort of day. But so look, guys, it's important to realize that not every day is going to be this easy to trade. And if you got caught sidelined with some shorts and you thought that it was time to go short and you didn't realize, you want to have 430 as short, 432. Technically, guys, I'm sure a lot of these setups that you guys were taking to the short side would have worked. Those were good shorts. Those were probably good trades that you guys were taking. But the reason why a lot of them did not work is because the longer time frame was leading to a bullish move, right? So if the longer time frame, the larger term time frame was leading to a bullish move, you can't expect your intraday bearish moves to work. And that is just a part of the trading game. And it is what it is. Dust yourself off. Come into tomorrow with a clear head. But just realize that once we do get a bit of a bounce, and if it starts to chop around, chopping around, that's not when you want to start. It's not really when you want to start going heavy on your positions. So what I would really like is we get a bit more of a bounce, 434, 435, then do whatever the hell you want. Do whatever the hell you want. Drop this market. I could care less, but we're leaning bullish. All right, we're leaning bullish right now. It bounced. It bounced for all of the right reasons. And now tomorrow we're gonna come back to today's video, or come back to the video. We're gonna see what's going on with tomorrow. And yeah, let's see if tomorrow we end up breaking above 436, 437. Then it would be really tough. It would be really tough for us to just like give back all of the gains and just fall lower. That would be crazy. But yeah, hopefully, best case scenario, we close above 437, call it a day, and then we could just fly back to 445. All of the people that were thinking we were going to hit 420 will get burnt, but who knows? One day at a time. We have the JPM Collar expiring as well, so one thing at a time. All right, let's not get too exuberant. So far, so good. The week started really well. Let's see how tomorrow is. All right. With that being said, I hope you guys enjoyed today's video. Once again, please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you guys so much.